Didn't get that notification.
Okay. So now if we check number one, value placement, what do we want to see when we're shifting and we want to be bearish? When it's a bearish trend, what do you want to see from a naked price chart, right? What do you want to see?
No overlap.
Lower lows and lower highs
Lower lows and
with
lower
volume
highs.
to match.
Exactly. So if it's lower lows and lower highs, are we getting a lower high and a lower low? Meaning
Yes.
is this high of this shifting here? And is this low from here shifting there? That would mean it's lower low. The high is lower low and the low of this range is also lower low. Just trying to give you a visual. So that matches as well, right? Value placement, the width is increasing, right? Which means the volatility is present, right? There's a lot of participation at the higher ends, lower ends, so the value is being accepted higher amount. There's other time frame participants also coming in. And the volume, what about volume? I don't even think you guys have to look at it too much, right? I mean, if you're to just put this here and let's say move pane above. Oh, no, I didn't mean to do that. Then put pane below. So if you guys do this, take a look at the candles. Now, for instance, on this, somebody go with this.
Yes, okay. Yeah. What you doing? I came earlier and did bicep and tricep.
Well, that body needs to go on mute. Okay. All right, that's much better. So the volume is significantly increasing here, right? We're on about 30 minutes, and you can see, for that expansion here, for the markdown, the price, and I'm sorry, the price going down, the volume is increasing. Does that check out? Does that make sense? I mean, we're going lower, volume is increasing.
Yes. Yes,
Yeah.
it does.
That's a good sign, right? Because it's one of the directional measures, right? Volume. So now if you look at it just for a moment on daily, how's that looking on daily so far? That looks pretty good. I mean, they have recovered here a little bit. They tried to break lower, they stopped. So now if they crack this, most likely they're gonna, there's a high chance you go to all-time highs. But for now, the sellers have shown that they're present. Volatility is increasing. We're getting random tweets about oil and probably soap next, or whatever we come up with, and the market's gonna react. And then eventually you can also condition the market where they accept these things as normal. There's really nothing normal about it, right? So it could be conditioning, it could be the change in behavior as well, or it could be signals for others, right? But nonetheless, the only thing that you can do tomorrow is trade how. What is the market telling you how you should trade this?
From value to value, single prints.
Okay.
Separating them.
So high, buy low.
Yeah, especially if they do something like look above and fail on this level tomorrow, right? So let me just remove the drawings. So let's say this level right here and this level right here are pretty important, right? Does everybody agree? As you look above,
Yeah,
you're finding something here. When you open below here, what happened? They immediately, within an hour, they're already inside here. And there's really no reason to short at that point because they're telling you what? 2 times. We had a gap, this time we opened and we drove the price. So even with the gap down, they were able to bring it back into the value. Even with the open at the lows, they're able to bring it inside the value. So they're clearly telling you what so far?
they don't want to
Price is
trade right
higher.
there.
This is perceived very cheap at this point. All right, so they're buying it in and they're stepping. So tomorrow, let's say, what would you guys say that your critical level is?
51 and 18.
Okay. that's, let's say that they're really nice and they give us that much range, right? On smaller scale, you have to somewhere identify the levels that will matter, right? In shorter time frames as well, right? In case a tight range, maybe it's not even worth trading, right? Because if you're getting something like this, if this is the range tomorrow, could you trade this? Probably, right? Is there a higher chance that it can break through the bottom than break through the top? Most likely, right? You have the POC, you have the value area high. If it's a two-sided activity, find a target somewhere in between. Let's say this is your, PT1 is right here at 91.25. This is 718 is the value area high of 3 days. So certainly, right? You look above and short, have a target somewhere in between if you have multiple to trim, and then you can go and ride all the way to the bottom, right? Hopefully, the IV is broken at some point when this starts, so that way we can catch some of it. If it just starts framing down or up right out of the gate, sometimes you can get caught on the wrong side of the trend. Like today was a pretty good example. If you started shorting too much, they would have kept driving it on those weak shorts, and then eventually this was a pretty good short. They gave you all the signs that you're above the value, and then of course the news come out and they sell off, but still, nonetheless, as a trader, you would take it as a look above and fail, and the news came because there was responsive activity of selling. Does that make sense? Like what I'm trying to tell you, news, whether they're not there or not, you look above and you fail, and then you're closing below the value for some time. Are you accepting the price higher or lower?
Lower.
At this point, it's lower. There's a quick rejection, and if you even trade this, right? Like let's say today you traded this. I mean, you're not risking much. If you take a short, let's say if you even waited here 708, 706 was a pretty big level today. I think I had it marked here. Yep. That's the single print. I mean, there was a lot in this area, right, today. So they came and rejected a few times. But for tomorrow, I could target in between the value area high, POC, and then value area low of the 2 days. And I would also just throw volume profile here and see if it matches. And it's, I would say, pretty close, right? Value area highs, lows match, POC is right in alignment. So you're looking at about 93 to 91. And then if you take a look at the daily single prints, if there's any excess on the days or if there's poor highs or lows, those can help you a little bit, right? So let's split this, see how long it takes for trading view to react. All right, is there anything interesting in today's profile?
Single print on A and B period.
Okay, so we have a really nice axis on the bottom, right? We have a buying tail on the bottom that kind of goes all the way up to here, I would say, right? 52.25. And then what about profile itself?
Looks like a P shape.
Anyone else?
Just really skinny.
It's kind of looks like value kind of going up a little bit, but definitely not stacking.
So it's definitely, I would say, short cover rally today. They came in, they trapped some shorts here. Probably a lot of them went in, right? Added to a short position, and then boom, they started covering, and this is where we went. But there is some excess there. The profile, does it look like a P shape? Yeah, but it's the range at the top of a P is usually, you would want it to be focused somewhere, let's say somewhere like this. This one is building almost double that value. So there's a little bit of volatility there, right? In the P. Typically, you don't want immediate volatility. You want, if it's going to continue, you're going to have compressed value, but not a lot of people taking profits, right? There and getting aggressive to take it, right? And then it just continues to drive. So you do have access. your values, as we've shown a few minutes ago, they overlap nicely and they give you a really good value area high and low that you can utilize. Is there any single prints or anything that you guys will look at here? Anything in particular that interests you guys in this section?
Only the poor eye.
Okay, so we got the poor high.
Would F be considered a single print since there was a M period next to it?
Oh, I like that question. Yeah, that's what I was hoping. I was trying to distract you all with everything else, but see who caught this. So how do you guys treat it? What do you guys think? How should you treat the M period?
I mean, it's almost like a spike.
So
It's almost like a spike that came back within the value area rather than going out.
So if you guys read the book by Peter, right? Peter marks slightly different than what I mark in terms of spikes, right? And he would find spike to be, this would be spike in his book, right? Is because you came back and you filled and you rejected the value that was created here. And you spiked from it, because we can't validate if you're accepted in the next period, right? Because there's no next period. So for tomorrow, which level would you guys care for?
To see if that quote unquote spiking of value is accepted.
That's correct. Because tomorrow, let's say if we open below here, this is something to keep an eye on. We open below the single prints 94.99 and they quickly get back in there. Let's say they hold this. Don't be short, right? There's a high chance they're going to run it, probably fill it all the way up. We're targeting about 41 or so. On it, if they break this, 41 is the target just because of the balance load that we had there. So if they do this is bullish. That means that spike lower is being rejected here, and then they won't seek price higher, and then you would be continuing to build value in top quadrant of the 3-day value area high. So that's not necessarily bearish, right? Because if you're building in the top and there's no sellers trying to eagerly push the price down, that means we haven't found them yet. Does that make sense? Maybe they're sitting at the single prints here, right? And we'll find out the aggression as they arrive, if they do that tomorrow. But for right now, this is daily information that I would pay attention to. It did spike. You see the letter M, right? Just kind of flying down to the next value that was kind of looking, eager to go higher, right? You see higher highs, higher lows, but not really breaking out till the E period. And now they came back, right to the middle of that and kind of stayed right above it. So they're not inside, at least they were not as well as earlier. We'll see if they're back above. So now if you look here, if they can reclaim this, that'll be bullish. If we open below this, I would look for the price to go where? Where would you guys look for price to go if we break 94?
Single prints. Single prints from this morning.
Like here?
Yep.
Okay. And which would line up here if you guys look. Let's say, not expand this guy. So these single prints will line up directly with a 3-day POC. So if we crack that, if you lose this level, you can definitely target the bottom, right? It might not be, the quickest ride down, but it'll eventually get there. And this is where you have really defined risk and really defined reward. Some people get greedy, right? They take a short here, they're up, I don't know, what is this, 30 points, and they're like, oh man, but what if I can also catch this, man? I can do this 10 times, I can be a billionaire, and I'll double my money every time. And that's in their head, right? But as a trader, you have to learn how to take profits here and take that with pride. That means you're right on here, you're accurate. Now you just got to manage your emotions and human greed, where you do not want more. You have to take what's given at the setup that you're given. Is there opportunity if you're, you're net 3 here and you cover 2? Is it possible that you put a trail here and manage that and learn how to ride lower? Yeah. But you have to learn how to do that all the time where the rules apply. Trim 90, keep 1. I'm talking about 90%, keep 1, or whatever the scenario for you is. You can learn how to do that, but you should learn also how to take profits and manage the risk. If you're taking a short here, let's say you had the access that was, from today, you're above and you're targeting this. This is not a bad trade, right? I'm just giving you a hypothetical scenario, right? So if you're taking this, now let's say something like this. I don't know if this is the case. A single principal can check. Is there anything wrong with this trade, for instance? Well, I don't know if that's let me make sure that I'm not lying somewhere. Okay, so a little bit higher. Let's just put it here. If that's your stop loss and this is your reward, is this a good trade to take for you guys?
Yeah.
Okay. And if I want to target this one right here, does it make sense that my stop loss stay the same?
No, you should probably put it like in the middle of the single prints above.
You don't on the other side of the single prints to get your ratio closer to something like that.
Yeah, like there, yeah.
So you could do this about 2.65. But which trade do you want as a trader? Do you want this one? Or
That's the first one.
which one do you guys is better for you?
I mean, less points and a higher risk to,
Yeah,
higher
that
ratio
one.
is better.
It's gonna happen faster too.
This one?
Yeah.
Anyone else disagree? It's going to happen faster, right? And that's the first target in between the targets that you would have. Otherwise, once you get to the 3-day equilibrium here, the fair price of 3 days, you can have responsive activity come in because they love that price, right? Somebody might be crazy, like, oh my God, I'm going all in at this level. It's a lifetime opportunity. And large orders come in, hence it's a POC, right? There's a lot of volume being exchanged at that level. And, a lot of time as well. So it's a fair price for now, and that's a good level to take your money off the table. Because if somebody finds something fair, they can buy in the quantity, right? They're going to exchange hands, and that's what they're telling you. They're exchanging a lot of hands here. They're happy trading right now in this area until somebody else steps in and breaks us out of this range. So you have a defined risk and you have a defined reward. If you break the rules, then risk becomes a lot bigger, right? Patience, if you're not able to, let's say you don't want to short here, you miss it and you're short here, that risk, that reward does not make sense. Then it requires you, it's almost like Titanic movie. You start watching a little bit and let's say you fall asleep, you miss that part and you have to restart again and watch the movie, right? Like you're not just gonna continue every day 30 minutes and fall asleep, right? At some point you have to watch the whole cycle. And if you miss the movie here and you miss the train and you totally just passes by you, you don't get in, that doesn't mean you chase it down because what happens is that your risk goes from here, right? I'm sorry, your reward goes and your reward is getting squeezed by your risk is really, really high that you're going to get stopped. So if you're not trading the extremes in the bracketed market, something is off because I'm trying to explain the value, responsive selling, initiative buy, initiative selling. Is there any initiation buying side that comes in tomorrow? Maybe, right? But it's not expected. What was expected here is that we come back and we bounce and we did reclaim target opposite, peak above, and you close below the POC, as somebody mentioned. That's not the bad, the best scenario you want to be. So hopefully this makes sense because it's just a bracket and we're shifting value lower. As of right now, if we really did not think this was value here, what should have been a quick response of the bulls?
To make it back
Run it
to
up
the
to
top.
that first
They should have made it back inside here, right?
Yeah, inside value area low.
So ideally, they should have been quick here, but instead, we tried 2-3 times today, get some sell off here. Is there a high chance that we can go to this 53 or so level tomorrow? Yeah, certainly, right? I mean, it's going to be ping pong in between, but the rules are so far we're in a bearish cycle, right? The trend up ended for a moment, right? Now we're framing down in a 3-day balance after a shift of value lower. So those are bearish signs, right? Unless we reject tomorrow and we crack the 718, for instance, level of the 3-day value area high. If you crack above that level and you don't see an instant return to the value, for instance, let's say 5-10 minutes, you're accepting higher, better than this, right? If they do something like that, then most likely you're going to continue running, and there's a high chance they're going to try to knock on the doors here about 41, 43, see if they can get back in, right? And this has a better opportunity for short than here. Can you tell me a reason why?
You already put them.
That value up there was more accepted, and there's more volume,
Okay, very good.
so we get better rejection.
Anyone else?
You had placed it before.
Okay, that's good. I think you guys got the point. What is there a good trap that they could set up here with this trade? You go here. We know above value what is expected.
Go up to
Selling.
the next value area.
Selling.
Well,
Initiative of sellers.
responsive sellers are expected above value, right?
Yes, responsive.
Yeah, so they could pretend like there's responsive sellers and then immediately reclaim, and you'd be short, and they would be running it back up to the penthouse.
Okay. But what about bull scenario? Like if you're a bull here and you really believe it's going to go higher, is there a potential massive trap for the bulls?
Yeah, take it up there
Oh,
and
single
then
prints?
short it.
Why you say that, Tom?
Oh, because as you crack the value area high of the 3-day period, the bulls are going to be like, okay, we're on the clear, so let's pile back in.
That's exactly what you want to watch out for, right? Whenever you're playing, you're playing a lowercase 3-day, I would say lowercase b shape clear, right? A lot of single prints here. So the aggressive initiation started here at this level. This is where the massive orders had to come in order to break 1, 2, 3, 4, 5, 6, 7 days value. So a 7-day value break with a massive volume increase, they're about to come knock on the doors, and that's where it was initiated, selling. So who's going to fight at this level?
The sellers.
It's going to be those initiative sellers that became what now? If they're really serious, what are they?
Responsible.
They're gonna start, shorting from there. They're gonna be selling from there. They're gonna have their orders ready to defend it. And then if you think about, footprints and order flow, if we get enough or plenty of aggressive market buyers to come in and absorb those sellers, limit sellers, then the price can be accepted higher, right? And if these guys are fairly serious, and based on volume so far, I would say they're much more serious than bulls. This becomes a perfect trap. These guys will jump in, everybody, right? Spike calls and boom, you go from here, and this can happen pretty quick. This can happen in a day. Just a tweet about Nutella or one of those, and boom, you're back down.
Not Nutella.
Yeah, we don't want Nutella. That's my favorite. So does that make sense? At least I'm hoping you guys at least see it. It's a distribution. It's a liquidation profile. So if they trap people here above this one, I would say on volume profile, maybe the 2 sig will be somewhere here. So this looks like a perfect scenario also to trap the bulls here. It'll be interesting if it happens, but I would love it. If they trap here and they give us an opportunity to short, I'll take a short here.
Is there a way to kind of get a hint of what's happening when it is happening? Like if it's gonna be a trap
Well-
or if it's like the bulls.
Well,
gonna push
that order flow is the best. So on the footprints, right, there's a couple of scenarios you can watch out for. Have you ever used them before?
I've looked at footprints, but I'm not really good at it. I see the numbers come in, but it's kind of like
Okay.
gibberish to me.
Yeah, so we'll do let's do a class Sunday. We'll focus on the footprints, so that way we can kind of explain at the time it's happening, and we can take a look at some of the reactive moments that we've had recently. Like we can look at levels around here and what led to it, and see if you kind of can explain it, right? Are you seeing delta divergence? Are you seeing any large orders, price not moving higher? Is it absorption, right? So I can cover that, and I think it will help you understand what to look for here. Right? How is the bid looking? Is it dropping, right? Is the volume staggering? Those are some of the things you can look on the footprints on individual candles or 3-minute candles. You can see really the distribution of the orders. And that helps. So let's do a class. We'll do a class Sunday of footprints and kind of correlate it to, identify a couple of key moments and then take a look at it and let's explain it. And some of these patterns really repeat just in different locations, right, of the chart. And relative to the chart of the left, where the price is trying to go, is it doing a good job getting there? Once you answer those questions, then you look at the chart and orders and you're like, do you want it to auction higher? Would you really do X here or Y there? And then once you answer those questions, like, okay, well, you're struggling a little bit. And that's kind of where you can spot the key spots, whether it's delta, whether it's large orders coming in, bid ask, those things help you define kind of context. Is it 100% proof that you're going to get them every time? No, because on the ask you have market buys and limit sells, right? So it can be a scenario where it's their hands not exposed fully, so you can figure it out. You can't really match those orders. But it gives you enough context and based on what you're seeing to make a decision that gives you the probability to be right. And as a trader, you want the probabilities to be on your side, not perfectionist in trading, because those don't really exist. Perfection is the one that can handle the risk, same way as profit. So can it be 100% proof? No. There's no way. But will you be more right than wrong? Yes. And if you go to a casino and you play blackjack, and let's say they give you 70% odds to be right, how would you play?
A crazy person. And win.
Or you could play conservatively with minimal rules on blackjack, fold when you have to fold, don't double down, on certain ones.
I just meant value. I mean, the amount. Sorry, not the way you play, but just the value you would bet.
Yeah, but some people, when they see that the odds are in my favor, they increase the size. And when you start increasing the size on the bets, there's 70% chance you're gonna be right, but there's also a 30% chance you're gonna be wrong. And people get overconfident quickly, and they're like, "Oh man, I'm right 7 out of 10 times. I want to become a millionaire overnight, and I want to do this." And they go all in, and then that 30% wrong becomes the right. It was the correct choice, and he's wiped out, right? And a lot of people have I would say, syndrome of this, right? They go on a hot streak, 1, 2, 3, 4, sometimes even 4 weeks. I've had a person go 2 months. And you know what happens to a lot of them?
One bad day.
They lose everything.
They tend to lose everything. It's a really vicious cycle because that tells me that you don't have control of what you're doing, right? You're letting emotions cloud your judgment, and when that happens as a trader, more times than not, you're going to struggle. It has to be binary in your head, and you cannot make conclusions based on what you want the market to do rather than what is market giving you and where can you react. And once you define those, and you can have clear decisions based on the rules, You regain 2-day value. I can't short you. I can only go long. It will help you as a trader at least to be on the right trend when you should be on that trend, like today. And some of you guys want to put your egos and you want to put you can't be wrong. The market will humble you. It will really humble you fast. So I would suggest that you get with the program and reading what is market telling you rather than what you want it to tell you. Otherwise, you'll have a really short career in trading.
So speaking of trend here, are we leaning towards a bearish trend? Or we're just trying to figure out where to enter?
Well, I think we covered that, right? A little bit. Are we in a bullish trend or a bearish trend?
Bear.
Okay, how so?
We went down. Well, we're shifted the value down. Lower low, lower high as well.
Mm-hmm. What else?
The volume's confirming we're going down. They're agreeing with it.
And the last piece?
The wider value area compared to the time we spent above there.
Yep. It tells you volatility is there, so you nailed all three. So you answered the question. Right now, the value is shifting, right? Is there a chance that they're going to try to get back inside? Which should be somewhat, bullish for now, based on the 3-day balance. But it would be really bullish if they can get back in and not get rejected here, because they can reverse really, really quick to the bottom of this or more. So this is where I think the fire starts. Maybe tomorrow. I don't know where they are right now.
So if we are on the one trade a day, it's probably a better idea to wait for the
This is your trade. This is your trade.
Gotcha.
And you know what happens if, for instance, you're on that diet and this never happens and they go here and they boom go here, what happens to you?
You sit and just be sad.
You sit and you should be depressed, but you know what? It's actually a good feeling, and you have to treat it in such way in order to become mentally strong at this game. Like I told you, when it's a bracketed market, the rules are defined. The risk is defined. The reward is defined. The more you take away from your entry, the less you're giving yourself. The further away you are from this top extreme, the more likely you're going to get screwed on that trade. So if you peak above, and let's say you don't make it, but you lose this, is there a trade for you? Would that be a sign that there's potentially a chance that, they peaked above the 3-day value area high, and then you see it, let's say access period D, Europe close, you have access and you're not able to kind of crack, close the access. Would that be a good short for you, Bloop?
I would be very tempted to short it because peak above and fail.
Yeah, that would be good. And that's probably a good risk, right? Because you'll know where the access is. Let's say it stops here somewhere a few points above. You'll have a good reference point for a stop loss. And it becomes a really good trade, right? Even if you play POC and then the extreme low, becomes a good trade. Ideally here, but ideally, they should open above this POC and then do that. So let's see. Well, hopefully that answers your question.
Yes, it does. Thank you.
All right. Well, I'll trade live tomorrow. Let's see if we can get into. I'll share my screen and go from there. But also, always, you don't need to increase size when you're in a bracket. Your normal sizing is also just fine. Points add up, so don't be in a rush to add all of them at once.